All right, everyone. Welcome. This is this is going to be another Asia trading session review. This is probably one of the best that we ever got. Super, super clear signals, super clear entries, and even considering that we had a stop loss, we had a loss. This was, as clean as you can possibly get. This was on the 18th of April, um, and we basically got a long and a short. Did the entirety of the Asia range, um, and this is going to be a very good example for you guys to see um, what you should expect when trading the reversal model that we use, and also several possible continuation trades, even though some of them get riskier and riskier. But uh, and I guess we also had a good example of what to avoid. So starting off with the session. So this over here is where Tokyo opened anyway. So generally we don't usually take trades before Tokyo opens. So this was being analyzed, but no trades were taken during this moment. But I would also like to zoom in here. Well, first let's have a little bit of a higher time frame context. We had been coming down quite a lot, very heavy in terms of downtrend, um, and so the New York session basically ended with a very impulsive move as well. So we were expecting a little bit of a retrace slash range, right? Especially during Asia, since New York basically did an expansion of what London did a continuation, and then started retracing. We weren't expecting much since the volume um, was basically dead by this time. Um, and as such, creation of internal liquidity would be what would be expected, right? And what I mean by staying inside internal liquidity would be between this line, which eventually created equal lows with the start of the London session, and also potentially stay inside this area. Um, so when we started, or just before we started, I mean, um, we had 5 hits to a high here. That was in between all of them was creating a regular bearish div. Uh, and when we did eventually change structure, this is what I mean by something that is lower probability. You don't really know where you're going to get in, and the risk to reward wouldn't be as great. So when we change market structures here, this is your first confirmation of a change in market structure, right? Because we have been doing basically like this. This is the only time that we change market structure. Uh, and we don't come back for this breaker block. We don't come back for this order block or this inside bar. We don't come back for basically any of that. Um, and so I'm sorry, just notifications. The only thing that we do retrace to is this breaker block. This was just analyzed in hindsight. No action was made here, but if you had somehow a crystal ball and knew that this breaker block would be a reaction, uh, well, if you had a crystal ball, you would also know where it stopped pushing, so you would have a perfect stop loss. But if you don't, uh, that would have to be your stop, right? Because you don't know if it's going for this brick or that order block, or that order block on top. Um, and your most safe target is this. So this is a 1.17 risk to reward, not potentially worth it, right? When you have to analyze all your risk and validations. Um, so this is something that you want to avoid. When you have too many possible entries, um, either you just choose your best one, and if it doesn't enter, okay, just trade that didn't happen, but no harm done. Uh, or if you try to get in on the most potentially like the higher probability entry, which would be this, then in this case it's just not worth it in terms of risk to reward. So basically things got really interesting the moment that Tokyo started, because we had that flush and then started going down, and we took out these lows, right? Came back to this order block, but especially these lows. I want you guys to focus especially on this. So we take liquidity from lows, and after taking that liquidity, create a pivot point, and we take it again. So we again, this is our main entry reversal model. We do what we call a final damage W. In between them, we have a divergence. We have a clear order block here, another one here. We because this one was a vector candle, we got the entry from there, expecting this blue candle to be fully recovered and not hold price. So that worked out really well. Our target was this because it seemed like the easiest target uh, to take, in the sense that if Tokyo just retraced to this breaker block, first of all, this breaker block is mitigated, so no, that's not a high probability move, right? And this looking more like a potential curve would also be what we would want for. In any case, this is the Sydney high for the time being, so it looked like the most possible, the most probable uh, take profit, and we did get there. I marked out all of these blocks just for you guys to have an example of the things that would have worked in this case. And all I'm doing is trying to be as um, mathematical and technical as possible, in the sense that what I'm marking here has no space for doubt of what can be marked. Okay? What I mean by that is all I did was mark out every order block that is followed by a fair value gap, and that's it. So apart from this guy, which is a breaker block, and this is our um, first little retracement. Then after that, uh, this would have been an order block followed by a fair value gap. This would have been an order block that would have given an entry. This would have been another order block followed by a gap. These guys, if you notice, don't have gaps after the blocks, so it makes sense for them to come for the only available FVG. After this, you have this guy, which was reacted to here, 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 and then once again. It's a little bit hard to see, but it was just barely tapped into it once again here. Um, this one, for example, is also valid, and of course, if you put your stop loss there, you would get stopped out. But this is also valid. This is also valid. This would also be valid, and of course, you would be stopped out. But keep in mind that all of these are analyzed and marked out the same way. And even if you were to get one stop loss here, and another one here, and another one here, any trade taken here would have covered those losses, right? Because we not only continued, but we then had even more chances like that. None of these actually got stopped out, and this is one of the interesting parts about the Asia sessions, is that because volume is a little bit lower, liquidity grabs are not as common. They obviously happen, but micro liquidity grabs like this don't happen as often, and you can most of the times you can follow a trade like this. Obviously, you can increase your stop loss a little bit to feel if you want to feel a little bit safer. But what I mean is there overall there's a lot of opportunities to enter a trade. And yes, I'm on the 1 minute, and this might seem a little bit sketchy to do trades on the 1 minute, but especially if you are on a crypto exchange or trading something with very low spreads, CFD with very low spreads, this is perfectly fine. So after we take this high, that high, we start creating divergences. So we take the liquidity in between this high and that high. We don't have a div, but we do have a div, regular bearish divergence right here, and we change characters here. So following the same idea, the same logic, we did an entry like so. We barely got stopped out, just barely, and after that the div maintained, it still stayed. We changed structure once again. Just in hindsight, this was also marked out. This was tapped right over here, wasn't retested. Front run if you extend it. But we changed characters again. Another block there, and that was the entry. After that, there are some blocks, subjective blocks, because this is not exactly a fair value gap, but it's a volume gap. It was tested. After that, you had not only this as a breaker block, but you had this fair value gap as well. I marked out these two candles because there's no wick there, so a little bit subjective, might have depended on the exchange itself. After that, basically, you would have either gotten in on here or that block, or you wouldn't. Because after that, you got some retests of fair value gaps, but nothing too crazy, and you got this sort of block here, but nothing too crazy. And we basically targeted the same place where we entered from on the previous long. The logic of that is, if all of this was already mitigated, it should not work in theory. At the very least, this is a very easy liquidity curve, right? A very ascending curve, and these don't usually hold price. So it would have to come down to this small area supporting price. From my experience, it doesn't usually hold price once again once a reversal happens here. If it goes there, it's going to grab the liquidity there again. But even so, this could have been trailed. Even if it started having a reaction there, this could have been trailed, and you would for sure make 3-4% of your account at least. In our case, at that time, I didn't notice that this alpha block was already mitigated. If I did, it would make more sense to have a stop loss like this. We used it like this, and so our risk to reward wasn't amazing, even though the move is kind of big for an Asia session. This was just a 5.81, but paired with this trade, that's a 6.49, and that gives us more than 10% for the day. This was an amazing Asia session. Very, very easy to trade in the sense that the signals were clear, the reversals were clear, and there were a bunch of continuation trades on the long, not so much on the shorts. And yeah, I guess that's basically it. Reversal method proving itself worthy again. This is one of those things, like even if you uh, lose 2, 3 trades like this, the one that you are going to get is really going to compensate for those 3 losses, especially on the long run. So yeah, this was another good example. A reminder that you guys can join us on Discord. We now have a premium section activated as well. More freebies for that. More perks for that. Sorry. But we have been trying to improve every day. More and more members are joining every day. So join us if you want to learn how to trade. We have been getting into gold trading now as well, and trying to do some prop firm challenges with the community. So we're trading as a group, trying to pass challenges as a group, which is, trying to fight the typical loneliness that trading is, right? So if you are either struggling or just need uh, another thinking head, to be with you on your trades, join us. We'll be happy to have you. And we have a really nice and friendly community that, it's a pleasure to help each other and grow as traders, as a group. So I'll see you guys around. Link is in the description if you want to know more about the Discord and other things that we offer. And I'll see you guys around. Peace.